Okay, no problem, no problem.
Okay, now you started. That's great.
Yeah, so first of all, I just want to know if you have any little bit experience, a little bit understanding about smart money concept. Do you have
Okay.
any understanding about smart money concept, or it is still something that you don't have any idea?
Brother, actually, I have no idea. I just saw your YouTube videos,
Yes.
so I just got some points. So if you teach me since, I
Yeah.
mean, from beginning, it will be better.
Okay. So do you actually?
I know the smart mining
Mm,
concept, which is top level, the peoples are, I mean, the big peoples will be sell. In
mm,
the bottom, the big peoples will be buy. This is what I know. This is the understanding what about smart money concept.
okay. Yeah, I
There
think
is
I think
nothing
yeah,
else.
I think it's still a new concept to you. So
Yes.
actually, smart money concept is one of the strategy that is very famous for now, and a lot of traders are actually switching from any kind of strategy that they actually used to trade, like the candlestick patterns,
Uh,
the support and resistance structures. So now there are a lot of traders are actually switching their strategies and are trying to master smart money concept, because
mm,
this strategy has actually proved to be like 70% right. 70%, I think it's
mm,
even more than 70%, because every trader who is actually a good smart money concept trader is actually having that consistency. And everyone who actually understands smart money concepts is someone who is actually capable of actually understanding the price action. Okay, so you actually understand when I say price action, is it?
uh-huh.
Yeah, the movement in the market. So because in smart money concept, we are actually trying to predict what is going to happen next without using any kind of indicators, without using any kind of I can say like any kind of robots, or the AIs or the EA, the robots. We don't use any robot, don't use any indicators. It is just market structure. What you can say, it is actually purely price action. Okay, it's just what the market is actually printing at the current moment. So you're actually trying to predict the next move by actually trying to look on what is actually happening right now. Okay,
Mm-hmm.
so smart money concept is actually, when I want to, if I want to explain to you what it means by smart money concept, I can say it is according to the founders, Inner Circle Trader, the master of smart money concept. The real meaning of saying it, we call it smart money concepts, because we are actually trying to trade like the banks. Have you ever heard of this word, trade like the banks? Is it?
Yeah, I got it. Yes.
Yeah.
The most of the bank they will be play with
Mm,
the same concept exactly.
yeah. So
The
we are
big players mean it's
actually
a banking guys.
the banks, the big institutions. Okay.
Yeah.
Yeah. So those companies, large capitals. Okay. So they're actually having that capacity of affecting the movement in the economy of any country. Because when we say we are trading the forex market, we are actually trading. We are if you are actually trading, for example, you are trading like maybe Euro USD. You want to look for an opportunity, and you are analyzing Euro USD. So when you say you are buying maybe Euro USD, it means you are actually investing in the economy of that country. Like if it's Euro, you are investing in the we can say in Europe, because Euro is covers the whole Europe. We can just say, like, let me use USD. Okay, so if it is maybe USD JPY, okay, you understand these currency pairs, or you are still new with the
Yeah.
currency pairs? Yeah.
No, 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 I understand these things.
Okay, so when we say we want to buy USD JPY, okay, we are actually buying,
Mm,
we are actually investing, we are actually buying a share in the economy of United States. Okay, so we are actually affecting the currency, the dollar. Okay, because it's that the currency of the United States. So if you're going to buy USD JPY, it's just like you are investing a certain amount of money in the economy of United States, expecting like the market is, like the economy of that country is going to go higher. Okay, like the value of US dollar is going to increase. Okay,
mhm.
so if you are going
So,
to buy USD JPY, it means you are buying the United States dollar, and you are selling the JPY, Japanese yen. Okay, so I don't know if you understand. I don't know if I'm too fast or if I'm actually explaining something that is still new to you, because I don't know
Yeah, yeah.
if you have this kind of knowledge, because I want to actually
Mm-hmm.
give you an understanding about the smart money concept. Okay.
Clear, clear.
Yeah. So if you are investing, you are buying USD JPY. It's like you are investing. You are buying a share in the economy of United States. It means you are actually going to be someone who's going to have that belief, like United States dollar is going to go higher, and the economy of United States is going to like, what can I say? The economy is going to go higher. Okay, they're going to, like, that currency value is going to go higher. It means you are actually expecting some positive changes in the economy of United States. That's why you are buying a share. Okay.
Yes,
It
yes,
means
you're
if
right.
the economy, if the economy go up, if the like, if it's then in the what can I say, in the charts, if you see candles moving to the upside, it means
Mm-hmm.
the currency value of United States, the US dollar, it means it is increasing its value. It means the same applies to the amount of money that you actually invested. Okay.
Mm-hmm.
Like you actually expected to see price going higher. It means if price goes higher as you predicted, it means you're actually in the positive side. It means you're actually getting profits. Okay.
Yeah.
So if we say you are investing in the economy of the United States, it is actually, we don't actually affect the economy of the United States, because we have a very small amount of money. So we cannot actually say, because you have risked maybe like $100, you cannot say you can actually affect the economy of the United States, is it?
Yes, you're right.
Yeah, we cannot
It's
affect
not
it.
going to be change
Yeah,
anything.
it's going to change anything, because a very small amount of money that
Yeah.
cannot even we cannot the economy cannot even identify any change with the amount of money that you can
Mm.
actually risk. So if we want to actually be in the right side, we need to follow the direction of those companies, the banks that are actually affecting directly the economy of United States. Okay.
So you're
So, and
right.
I think you know some of the companies that are the big companies from United States, like the Microsoft, Google, like Tesla. Okay.
Yes.
Those are big companies that are
Yeah.
actually the Apple. Those are big companies that are actually, they can actually affect the economy of United States. For example, when you say, like, for example, if Elon Musk from Tesla decides like to maybe stop producing any car, stop producing any kind of product that they're actually producing, and the same applies
Mm.
maybe to Google and Apple, it means
Mm.
the economy of United States is going to shake,
Yes,
because those
absolutely.
they are controlling that economy of that country, because if they get profits, it means the government receives a lot of revenues, and also there will be a lot of kind of transactions from that company, which are actually helping the economy to grow. Okay.
Yeah, yeah.
So if we want to trade, we need to understand. That's why we are always having that. We need to actually understand about the news, the economic news. You have that idea a little bit. You ever heard people telling like you have to look at the fundamentals? Is it?
Actually, frankly, no, because I'm not watching
Yeah,
any
yeah.
economic news.
Okay, no problem. It's a simple kind of thing. Like it's not that difficult. It's like you just like understanding, like just like listening to what is happening in the United States. Like
Mm-hmm.
you are hearing like someone say like maybe we have an increase in the employment of United States. It means a lot of people are actually getting jobs. It means the economy is actually growing. So you can
It's
actually
growing,
expect
yeah.
it. Yeah, you can actually expect to see price pushing to the upside. So if you are a trader, you can actually say, I'm going to buy here because I think the economy is going to be good and it's going to grow. And I think if I buy USD JPY, I can actually expect to see positive results. Okay.
Mm-hmm.
So actually, if you want to trade like the smart money, it means you have to follow the direction of those big banks, those big institutions that are actually affecting the economy of the certain country directly. Okay.
Mm-hmm.
Yeah. So that's how we can actually say smart money concept is a strategy that help us to actually trade safely, because we are trying to follow the direction of those institutions that are actually affecting the economy of the certain country. Okay.
Okay.
Yeah. So if it is actually maybe GBP USD, we always say, like, if you actually have a currency pair like GBP USD, it means if you buy GBP USD, it means you are buying Great Britain pound and you are selling USD. Like, if it is a buy, it means the first currency there is going to actually be, like, if you are buying, it means you are buying the first currency there, GBP, and you are selling the next currency like GBP USD. It means you are buying GBP and you are selling USD. Okay.
Yeah.
Yeah. So it is always like that. So if you are selling
Mm-hmm.
GBP USD, it means you are selling GBP, you are buying USD. You understand that?
Got it. Yeah.
Yeah. So it is like that. So smart money concept is strategy that actually help us to actually avoid the trading against the direction of those big banks, those big institutions. Okay.
Mm-hmm.
Yeah. So I think there is another concept, another chapter where I'm actually explaining about smart money concept. When you actually read this PDF, I will send it to you and you actually check somewhere where I'm actually giving an understanding about what is the smart money concept. Okay.
Sure.
Yeah. So in smart money concept strategy, we are actually having several chapters, and it is important actually. The first thing that is very important to understand is market structure. Okay.
Okay. Okay.
Market structure is very, very important to understand, because it's just like the foundation of the strategy, just like something that you
Mm-hmm.
need to understand first before you can actually start to analyze. You need to know the market structure. Just like if you want to be a doctor, you need to understand about the anatomy of the human body. Is it? You have to
Yes.
understand. So this is just like
Mm-hmm.
the anatomy of the forex market. Okay, you need to understand what is it in there. Like, if it's the human body, what is inside the human body? Like, you have the heart, you have different kind of organs. Okay, so
Yep.
you need to know them, just like here. So you need to understand the market structure. What is inside the structure of the market? Okay,
Mm-hmm.
so when we are actually trying to understand about market structure, we are trying to look on what we can actually observe in the market. So if you are, I think you are actually familiar with trading view, is it? Or you are using MetaTrader 4 and 5? You are
Yeah, I'm
familiar.
using TradingView.
Okay, so if you are familiar with TradingView, I
I'm
think
okay
you
with
can
it.
yeah, it's a
Yeah.
good website. It's good to use because
Mm-hmm.
you can actually have a lot of tools to actually help you to analyze. Okay, it's different from the MetaTrader 4 and MetaTrader 5 because they have a
Oh,
few tools. So trading view, actually, if you are actually opening trading view, you have maybe you have registered yourself and you have your account there. So they'll actually provide you with different currency pairs. Okay, you can actually
so.
search maybe for Euro USD. Okay,
Mm-hmm.
so the moment you click that Euro USD and the charts open, okay, and you see like
So.
different candles they have been formed, like candles moving to the upside, kind of moving to the downside, like the bullish candles, the bearish candles. Okay,
Yeah.
what you see there in front of you when you have actually clicked the Euro USD and you see the market displaying those charts, different price movements, different candles
Mm-hmm.
movements. That is what you can call market structure. Okay,
So yes,
that's
you're
market
right.
structure. That's what we can actually. So we are going to start looking at that market structure, trying to check what is actually happening, what is this being formed, and you will actually see different kind of structures. You will see like the market moving to the upside, the market moving to the downside. Okay,
Mm-hmm.
so that's actually market structure. Okay, so that's a
Okay.
simple understandable market structure. Just what we can actually see. Okay, what you can actually see, for example, if it is gold, you can actually see like bullish candles, bearish candles. That's market structure. But inside that market structure, there are different concepts that we need to understand in order for us to actually start having that ability to see opportunities in the market. There are things that we need to understand. There are several concepts that we need to understand. Okay.
Mm-hmm.
So I think you can see this. You can see this chart here. Okay.
Yeah.
So this is gold. Okay. And what we can see here, this is market structure. Okay. This is market structure. Okay.
Okay.
And looking at this, you need to actually have that ability to see opportunities, ability to see levels that you can actually start to buy and levels that you can actually start to sell. Okay. And that's why we need to start with market structure first, the foundation of our course. Okay. So we have the bullish candles, we have the bearish candles. I think you know them, is it?
Yes.
For example, I myself here, the bullish candles are this like light blue colored, okay?
Okay.
And the yellow ones, these are bearish candles, okay? So
Yeah.
you can choose any color that fits you, okay? So market structure starts with understanding what is actually being created in the market. Like if you try to check this, like we can see price has been moving. Generally, price has been moving to the downside from somewhere here, from this side here. Like I can say price has been moving to the downside, price has been dropping.
Yeah.
Okay, so this is like a general structure. We see market dropping, but inside this drop we can see several levels where the market is actually moving down, moving up, moving down, moving up. Is it?
Yes.
It's not just like a full drop. It's just like the market. It's not just like the market is dropping very. It's just dropping. It means the market is actually dropping, and also is actually pushing to the upside, pushing down, pushing to the upside. But the general structure is a bearish market structure, what you can call a downtrend. Okay. So the market is not going to just drop in a like very easily, like just dropping without any kind of movement to the upside. You will see the market dropping, but also moving to the upside. But the movement that is going to control the market is going to be that bearish movement. Okay, so it means the market is not going to be straight. Okay, it's going to create these kind of levels, upside movements and downside movements. Okay, but you need to look on what is it in control? What is it in control? Is it the movement to the downside or to the upside? If you look here, you will see like no matter, like we can see opportunities to this movement to the upside. We see like the market is showing strength to go to the downside. That's why these movements to the downside are the ones that are actually having that strong pressure. Okay, these movements to the upside are just short-term movements. Okay. Yeah, so this is the downtrend. Okay, so this is one of the type of market structure. Like we have a downtrend, okay, a movement to the downside. And for us to identify a movement to the downside, we have to see the market breaking the lows. Okay, like if the market moves to the downside and move to the upside a little bit, you have to see the market continuously breaking these levels. Okay. Like this was the lowest level that was created before price started to move to the upside a little bit. Okay, but when price reached here, price dropped and broke this level and it created another low. Okay,
another low. Yeah,
so it means price is breaking the previous low and creating a new low and pushing to the upside a little bit, and again breaking this previous low and creating a new low. Okay, you see that? So it means the lowest levels are actually continuously being broken, and it means price is going to keep dropping. Okay, it means this movement to the downside is having, you can say the pressure to the downside is so strong. Okay, like the sellers are actually having that capacity of breaking structures to the downside, and buyers are not having that ability to continuously move to the upside. So they just move a little bit, and then sellers enter the market and they show that strength to break structure, to break this low. Okay.
Yes.
Yeah. So if you want to apply,
is going downtrend.
Yeah. So if you want to apply this in a little, like I know you are actually someone who actually visits the market. So you know, like if you go to the market and there are a lot of sellers, it means like sellers are having there are a lot of sellers, it means there are few buyers, and it means sellers are the ones that are actually controlling the market. Okay. So the market has buyers and sellers, and we need to see that kind of structure even in the charts. Like you cannot actually see only buyers in the market. So we need to see sellers, people who are selling. Okay, that's what we actually see here. Like price is not just dropping. Okay, price is dropping, but again we see buyers. It means sellers are in the market. We need to see buyers buying from those sellers. Okay. Hello?
Yeah, I'm with you.
Yeah, I think am
I'm
I
just
confusing you?
listening. No. It's going well, alhamdulillah.
Okay, so it means like if we are in the market, like let me say like I'm actually going to visit the market and I want to buy something from the market. Okay, it means I need to expect to see sellers from there. I need to see sellers there for me to buy something. Is it? There has to be
Yep, of
sellers.
course.
Yeah, and that's the meaning of the market. There is buying and selling. You cannot say that this is the market and there is no one who is buying or there is no one who is selling. It means there is what we call imbalance between buyers and sellers. Okay. Yeah. So even in the forex charts, we need to see that kind of thing. We need to see those bearish candles and bullish candles. It means we need to see sellers and also we need to see some buyers. Okay.
Yes.
Yeah. So it's not going to be like here in the forex market, in the forex chart. This is electronically. It's not the same like in the real life. But these candles are actually showing us like an example of how the market operates. Like we need to see sellers and also need to see buyers. But for us to say this is a downtrend, it means like if it is a downtrend, it means sellers are so many to the point that they're actually creating that imbalance with buyers. Okay.
Okay.
Yeah. Buyers are few in the market, and that's why we see the market continuously dropping. Okay.
Yeah.
So if you want to actually make profits, you need to actually sell from these charts, because actually you see sellers having that strong pressure, the strength to actually continuously push price to the downside. It means if you want to be profitable in the forex market, you have to follow the trend. Okay. You cannot
Yeah, we
actually
have to
say
follow the trend.
you cannot actually say I'm going to buy while you see the market is full of downtrend. Like it means sellers are controlling this market. So you need to wait. If you're actually trying to look for opportunities to buy, you have to wait until you see this bearish movement or uptrend or downtrend has ended, and you see like now we can actually expect to see buyers entering the market. But up to now here we can see the price was dropping. Okay.
Yes.
Yeah, because the movement that has strength is the bearish movement. So if you want to make money, you need to follow the trend. You need to actually look for sales if you want to make money. Okay. That's an example of market structure. So in the market structure, we have the downtrend, like what I've actually shown you. We have also the what you call an uptrend. Okay. Yeah. So the types of market structure, that's why I want to actually explain them. We have this bullish market structure. This is an uptrend. Okay. I've already explained about this bearish movement. Let me show you. This is the bearish market structure, what you can call a downtrend. Okay.
Yeah,
This is an
this is what
example.
we saw that.
Yeah. So what the market actually creates in the downtrend is what we call the lower highs and lower lows. Okay. So we have the lower highs and we have the lower lows. These are parts, or what you can call are the parts or the levels that the price is actually creating in a downtrend. Okay. There are lower lows and there are lower lows and lower highs. Lower highs and lower lows. Okay. So the lower high is the highest level that the bearish or the downtrend is creating. Like we are in a bearish movement, we are in a downtrend, but price is actually pushing up and pushing down. Is it?
Yes.
So this push to the upside is the point that the highest level that price reaches when pushing to the upside is what we call lower high, and the lowest level is what we call lower low. Okay. So in bearish market structure, or what we call downtrend, we expect to see price breaking these lower lows continuously. Okay.
Clear.
And also another thing that we need to see if you want to know this is a downtrend or bearish market structure is price has to continuously respect these lower highs. Price is not supposed to break above these lower highs. Okay. So we cannot say
it's
that
change.
if we see that, we need to actually start to have, we need to have that patience to see what's actually been happening. Okay, is it a change in the market structure, or is it just some kind of trap being created in the market? Like the market can create this kind of structure and this, and then continue going down. Okay.
Okay.
So you
So
see
also
price.
it will go down.
Sometimes it can happen like this. Okay.
Mm-hmm.
That's why there are different levels that I'm actually going to explain to you. This kind of structure can be what we call liquidity. Okay. Liquidity being actually happening in the market, trying to create some traps in the market to take out some early sellers before they can actually mitigate this kind of levels. They can actually expect this kind of level. Okay. So this level can actually act as a trap. Okay. Yeah. So sometimes the market can do the opposite. The market can actually create that and continuously change the structure, change that market structure. Okay.
Okay.
Yeah, you can see, like, that's why we say the market is not going to continue moving in the same direction always. Okay. There are different kind of market structure. That's why I've actually started to explain to you about this downtrend. Okay. This is the first example or the first type of market structure. Okay.
Okay.
Yeah, so this is the first. And when we have a downtrend, we can actually, at a certain time, we may actually expect to see the opposite of this downtrend, which is an uptrend. Okay. So this is an example of charts that we can actually see lower lows being created and lower highs and lower lows. Okay. So you can see price is not moving above these levels where we have the lower highs. Okay.
Yeah.
And we can see prices continuously breaking the lower lows. Okay.
Yeah.
Yeah, so this is what this can give us, like what you can say can give us confirmation, like this is a downtrend when we see price continuously breaking the lower lows. I can't believe we have 10 minutes. So this is the lower lows, and in a bearish market structure, we expect to see price continuously breaking the lower lows. Okay, that's the first rule for us to actually say this is a downtrend. Okay.
Clear, brother.
Yeah. So those are the rules that can actually give us an indication like this is a bearish market structure, and we can actually start to look for selling opportunities. And it's going to be selling opportunities only because I can advise you, and it's always an advice from all traders, like make the trend your friend. Okay. Trade by following the trend. Okay. Don't go against the trend. If you are in a downtrend, follow the trend. Just look for opportunities to sell, not the opposite. Okay.
Sure.
Yeah, that's why we say, and the reason we are actually advised to follow these rules, like the market has to continuously break the lower lows and respect the lower highs. It means where we have these lower highs is the area that we are actually going to look for areas to sell. Okay. Okay.
Clear.
Because the market is not going to go above these levels. So we can actually expect the market to bounce around these lower highs. Okay. So you can actually see the market bouncing close to this lower high or just at the same level with the lower high. And then we can actually expect to see some movements to downside. Okay.
Sure.
Yeah. So that's a downtrend. And to understand a downtrend, just follow those rules. Like you have to see the market respecting the lower lows and respecting the lower highs and breaking the lower lows. Okay.
Sure.
Yeah. So this is an introduction. Don't think like this is just an introduction. That's why we say this is the first chapter, the foundation of our course. The real strategy is going to continue when we actually continue learning. Okay.
Inshallah.
Yeah, this simple concepts. Like we have this bullish market structure, what you can actually say the uptrend. Okay, so it's a bullish market structure or an uptrend. Okay, movement to the upside, a creation of higher highs and higher lows. Okay, so these are just levels that you need to understand. Like if you are going higher, that's why we say higher highs, because we are going higher. Okay, and this is higher low. Why? Because we are going higher, but this is the lower level. Okay, that's why this is the higher low. Okay, so we expect to see the market, and if we expect to see the market moving to the upside, we also expect to see the market continuously breaking this previous highs. Okay, that's what we need to expect to see if we are in a bullish market structure or an uptrend. And also we need to see the market respecting these higher lows. These are not levels that they should not be broken. Okay, they should not be broken. So the market has to continue respecting this level, or can say the market has to bounce around these levels. Okay,
Fine, brother.
yeah, so that's what we are supposed to see. Like what is being formed here, you can see the market is continuously breaking to the upside, continuously breaking these high highs. Okay, and these levels are not being broken. The market is respecting these levels. Okay,
clear, brother.
Yeah, that's the kind of structure like this. That's what we call the bullish market structure or an uptrend. Continuously breaking of higher highs and respecting of these higher lows. Okay,
clear.
Yeah, so that's a simple understandable market structure. But also we have another type of market structure, which is what we call the sideway, or what we call consolidation.
Consolidation.
Like, okay, yeah, it's a collective move, like the market creating equal highs and equal lows. They may not be
in
purely
the range bound.
Yeah, it's the same. That's the range bound. Okay, the ranging market. Yeah. You see the market ranging, creating some levels like resistance and support. Okay, and these are this is what we call another kind of trap that can be formed in the market. We are not actually advised to trade this kind of market structure.
Yeah,
because we don't know any time that the market can break out of this range. Okay,
exactly.
So you may see the market ranging, but you don't know when it will break to the upside or when it will break to the downside. So what you are supposed to do, be patient, wait for that break out of this level. And after you see that break of structure, break out of this range, you can actually look on what kind of structure is being formed.
Okay, we have to wait also.
Yeah, you wait what happens after we actually move out of this range. So a consolidation
maybe it will be also a trap, right?
Yeah, it's a trap. It's clearly a trap, because you may actually sell. Okay, I have seen that some 3 touches, like the first touch, the second touch. So I'm actually expecting to sell on the 3rd touch. So you don't know if you are lucky or you are not lucky. You may actually say, I'm going to sell here, and the market goes above your level. Hit your stop loss and you're out of the market. Okay. So what is important to you is actually waiting for that break out of this range, so that you may actually look for opportunities. Okay. For example, here we can see like the market consolidating and breaking to the downside. Another kind of see this, like the market is actually, price is not showing any clear moves. Okay, and you can see clear moves like an example of clear moves like this movement. So see, impassive move. You understand when I say impassive move? Is it?
Yes.
Movement was like this. Like you see these candles here, very strong, very big candles here. Okay. These are what we call impassive movements. Okay, the market breaking out of that zone with an impassive move, with a speed Okay, this kind of movements. Okay, so these are movements that are actually supposed to be seen. It is either movement to the upside or a movement to the downside. Okay, but not this kind of ranges. Okay, this kind of, like, the price is getting a lot of wicks. This is not safe. Okay, this is a kind of, like, it's a consolidation to the downside, which you can actually say a trend line. Price creating some kind of trend line. Okay.
Okay.
So this is just the same as consolidation, because price is not showing that a strong movement to the upside. Okay. Yeah. So we need to see either movement to the upside, movement to the downside, movement to the upside. That's what we need to see, and not this kind of structures with a lot of wicks. Okay. Like, price is actually trying to consolidate inside the certain kind of level. Okay.
Okay.
So those areas with boxes are areas that are not easily for us to actually look for opportunities. So we need to actually know the market structure before we can actually start to look for opportunities. Okay.
Sure.
Yeah. So that's how we can actually understand about market structure. Any question? Any advice?
Fine,
Any idea? Like, I think maybe if you explain to me
I'm not
someone.
the one to give you the advice. You have to give me the each and everything.
You know why I'm telling you to give me any advice? I'm telling you because actually when you are teaching someone, we differ the kind of understanding, we differ the type of class that we can actually see for us to understand. Some people like that kind of conversation, that they ask some questions, they get that opportunity to ask something. Someone also likes to listen. Okay, so I just give you
This
that
is my
opportunity.
character also the same. The
Yeah.
someone who's going to be listen whatever you're going to share.
Okay, so you're going to absorb.
Yeah.
You're going to take
Yes,
it. So
inshallah.
yeah.
Again and again and again, I will watch the video. Then, inshallah, I will get some information. Inshallah.
Yeah, and if you get any question, any curiosity, something that is challenging, feel free to ask me. Don't just hesitate.
Sure.
Don't think like this
Sure.
is, I think this is so, this question is not good. Maybe just I'll try to look for myself. No, just ask me any question. Okay, you have that
Anything,
ability.
inshallah.
Any question that relates with our
Okay,
class
sure.
here. Okay, and I'll make sure to give you the answers. That's my job. That's my responsibility. Okay.
Sure, brother. Sure, brother.
Yeah. So I think we have the lessons on 1 minute.